Welcome to Markets Now. I'm Michelle Rook along with Dave Chatterton with Strategic Farm Marketing. And we ended mostly lower in livestock today with grains to the plus side. And we had some choppy action initially, Dave, but obviously we're looking at weather being a big factor and position squaring here ahead of the WASDE report tomorrow, right?
Yeah, those are the two biggest factors that are driving the trade here today in the short run, Michelle. And of course, there's a little bit of a debate going on between the major weather models here. We've got a GFS or a US model system that's certainly been leaning to the wetter side. That model switched back to drier here at midday on the midday runs and certainly helped the market reverse and for futures to come back. The European model has been a little bit more consistent in a drier outlook, or I should say less rainfall than what the GFS is showing. And, how that's going to play out next week going to be very important in light of how these crop ratings have already declined this week, are probably likely going to decline again on Monday. And of course, as you mentioned, we're playing right into a USDA report that comes out at midday tomorrow. So certainly the potential for a lot of market volatility is stacking up here as we go.
Yeah, I want to do a little deeper dive into some of the WASDE expectations, Dave. But first, since we're talking about weather, Drought Monitor also out this morning, certainly showing an expansion of drought areas. 45% of the corn acres now in some area of drought or level of drought?
Yeah, and so I think that was helpful, to the market to reverse at midday as well and kind of erase those overnight or early session losses. And what we saw, I think it caught the trade's attention here. 45% of the U.S. corn area, 39% of the U.S. bean area, in a D1, which is a moderate drought or worse at this particular point. Now, those aren't necessarily record type of levels, but they certainly are leaning the wrong way and are responsible for that decline in the crop ratings that we talked about a few minutes ago. And when we look at Illinois, the corn rating last week dropped 19% in 1 week. And those same numbers from the CPC today show that 49% of Illinois is in that D1 drought or more. When you drop that back to central Illinois, which is where I'm located, 94% of the central Illinois crops are in that D1 drought. So certainly, a timely rain and consistent rains going forward are going to be important for the potential and the yield in the crop as we look at soil moisture reserves essentially being depleted here.
Yeah, you say we have to look at that as far as yield potential going forward, but USDA isn't likely to recognize it in the WASDE tomorrow, right?
Yeah, very, very true. USDA, it's a little too early in the game for them to typically jump into that basket. I don't think conditions are poor enough at this point or ratings have dropped enough for them to do that. If you do the mathematical correlations on these weekly USDA crop ratings versus the final yields, Michelle, at this point in the process, this early in the game, those correlations are fairly low and really not very useful in terms of predicting what final yield can be. And I think at the end of the day, that tells us that certainly better weather, starting next week or even perhaps the following week, can still save this crop and still produce what's an average to above average crop. There's a lot of talk, or continues to be a lot of talk, about this transition from El Nino. It was interesting today that we also had the CPC out confirming, it's official that there's an El Nino in place here over the U.S. They expect that to strengthen into the end of the year. And, there's a few correlation years for that, like 2016 is a good one where, yields, I think that year finished 3.8% above trend in corn. And so you can't take that off the table. You can't rule out that we go the other way. So like I said, it sets up for volatility here and a very, very tough for traders to kind of, take a lot of conviction into the weekend here.
Absolutely. And of course, the key will be in the timing of when that El Nino strengthens, obviously, and its reflection on yield results. All right, let's talk about WASDE, though, from the perspective that what demand will be if we see changes, the thing that USDA will likely adjust in this WASDE?
Yeah, domestically, we're certainly watching the export lines, both corn and soybeans. The export sales that we had today, again, this morning, a little bit underwhelming in terms of where we're going. We did get a bounce back in soybeans, but those numbers in general are tracking below the USDA full year targets or the seasonal pace that we need to be on to hit those targets. And in doing so, there's an expectation that the USDA could cut back on those. I think that contrasts a little bit, in terms of how these old crop, new crop spreads have acted this week and the strength that we've seen for old crop, with some talk that the USDA is probably overstated, I should say, the soybean crop from last year, as well as understating the feed and residual demand on the corn side of the balance sheet. So there's a lot that can happen there. I think when you widen that out internationally, Michelle, the focus is going to be on South America. Again, we're going to look at what the USDA does. They're expected to raise both the Brazilian corn and soybean crops again. Whether or not they choose to, leave the Argentine numbers alone or cut them back a little bit and maybe offset some of those gains, all going to be in play here. But the general expectation by the trade is that carryouts are getting bigger here because of the domestic demand side of the balance sheet. And in doing so, whether it's old crop carrying over into new crop or even just to focus on those new crops, a 2 billion plus corn carryout and a 350 to 400 in the beans keeps the market a little bit on the defensive here in terms of where our yield perspective is going to be the rest of the summer.
Yeah, we definitely could get a bearish reminder of that in tomorrow's report. What about the wheat market? A big down day yesterday, a big update today. And so was it just short covering here by those funds, or was there something fundamentally that pushed that market?
Yeah, don't really see anything new on the fundamental side of the fence here. I think this is just the ebb and flow of the wheat markets as we go forward here, and certainly the intercommodity, spreads and plays. And when we look at, wheat expectations for tomorrow, don't change a whole lot. They're looking for the crop to get a little bit bigger, for the carryout to bump up just a little bit. But I think the key here, Michelle, is still on the export side of the fence. When we look at hard red wheat offers in the U.S. versus what we can find out of Russia or Europe, you're talking about a spread that's probably $60 a metric ton. If you talk about soft red winter wheat here in the Midwest, you're probably talking at, we're at a premium to the French offers by $5 to $10 a metric ton. And until we can kind of open that export window here, I don't think the trade sees any shortage of carryout here in the U.S. or of exportable, wheat supplies coming out of Russia and Northwest Europe here anytime soon.
Yeah, it was a sad reminder this week to see all that wheat from Saudi Arabia's tender and the Egyptian tender go to Russia and such a low price. So is that the reason why we don't get any big movement or follow through on some of these Ukrainian headlines, even talking about this dam being busted this week or being damaged?
Yeah, I think part of it's timing and logistics, and this is the time of the year that we're normally seeing the supplies or the exports from Ukraine slow down quite a bit. So we're in that period where they didn't have a lot left to move anyway. The speculation on how much they're going to produce for new crop, what the effect of this dam, breakage is going to be. There was somewhere in the order of 4.5 million metric tons of production in those areas that certainly we'll get something out of it, but could that be jeopardized even further? And there's a lot in play looking forward. I think, the money flow in the market has been to the short side for quite some time here. We've had funds in near record short positions in Chicago. We a little bit less so, or a little bit more neutral in the Kansas City and the Minneapolis contracts. But part of that anxiety going forward is, we just haven't triggered enough on the fund short covering side of the fence here to really get that money flow or get that interest moving back. And part of that comes to a technical picture, just as you described earlier, one day up, one day down. And it's kind of this 2 steps forward, 1 step back, go nowhere type of a process. And, we've seen worse days in the wheat, but certainly, we haven't triggered a degree of anxiety among those large specs or funds to trigger the short covering.
Absolutely. Cattle market. So let's talk about that one. A lower day again today in cattle after record cash trade yesterday. Is this a confirmation of these key reversals in a top, or just a healthy correction in an otherwise bigger bull market?
Yeah, I think it's a little bit more of the latter, Michelle. I think it is a warning sign here. We know that we've had, a near record fund length in the cattle complex, very dissimilar to the wheat that we just talked about. And it's a situation where maybe the futures got just a little bit ahead of the cash markets here and are falling back. But we've now got the June contract and certainly the deferred contracts again in a discounted mode to where the cash is trading this week. And, it's been a very strong cash week. It looks like, production numbers and kill numbers are going to be a little bit less than subpar here again this week, keeping the pressure on that box market and the cutout situation. So at the end of the day, the cattle fundamentals remain bullish longer term. How much of that we've priced into futures, I think is arguable and certainly can be open for debate. But a good healthy correction here is not the worst thing in the market. We did have the reversal action yesterday, but we're a long way from taking out, this week's low, let alone last week's low, which would be a more of a warning sign in a technical picture. So I think it's still more of a corrective action here. It's probably a healthy cleansing, perhaps, of some of these long positions and some of the spec length in the market, but definitely something that, I think as a long spec or a long fund manager right now, you're a lot more nervous than you were, this time a week ago.
Absolutely. What about the hog market? We had the big up week last week, some nice follow through on Monday, so a nice recovery rally, and then we've seen consolidation the last 2 days. What do you make of all that? And is this the case that the futures just got too far ahead of the index again, or what?
Yeah, I think that's part of it. We had a large fund short in that hog complex, exact polar opposite of what we had found in the cattle complex. Most of that short looks like it's probably been covered by now. We'll get a better confirmation or a kind of a catch-up look from the CFTC data on that tomorrow afternoon. But we've kind of run out of short covering here in the near term. And the cash market, unlike what we're seeing in the beef side of the complex, is stabilizing, but not necessarily running in leaps and bounds like what we found with the beef. And so I think until we can get a lot of frozen stocks here still to get through, exports are still a question mark. Got this California Prop 12 going on. We got, herd shrinkage. We got a number of things spinning in the market as we always do. But I think there's enough question marks there and reluctance that until that cash market shows some leadership, you're probably not going to get a lot of long interest in the side of the spec community in terms of coming into the hog market. So maybe a little bit of an impasse here. It's certainly been it's been a nice recovery here. It's a question of who's the next buyer in this market. And I think there's a little bit of question mark around that.
Dave Chatterton with Strategic Farm Marketing, and that's Markets Now.